Hello, everyone. I am Dr. Drew, and I'm doing an experimental video where I annotated a chart of the US dollar versus Japanese yen, uploaded that into ChatGPT to generate a script that then is fed into Notebook LM to generate a script for a podcast style discussion. I am very interested to hear what you think about this. This is me, the human. Please subscribe to the channel and let me know your feedback in the comments. Let's get it started.
Welcome back, everyone. For today's deep dive, we're going to explore how technical analysis can shed light on the often complex world of currency markets.
Sounds fascinating.
It is. We'll be focusing on USDJPY, that's the US dollar versus the Japanese yen.
Right.
And we're going to see how using a couple simple tools like the 50-day moving average, and that's the red squiggly line in your charts, and a key breakout level can help us really understand price movements.
It's amazing how combining these two simple elements can give you such a clear picture.
Absolutely. And remember, as always, this is for educational purposes only, not financial advice.
Always good to remind everyone.
So to start, let's take a look at that black horizontal line you see on the chart.
Okay.
That represents a significant resistance level. It was formed by a double top back in 2022 and 2023.
Right.
Breaking above this line really hinted at a potential shift to a longer-term bullish trend.
Interesting.
Now let's fast forward to early 2024. This is where things start to get interesting.
Okay.
What was happening with USD/JPY at that point?
Well, for the first few months of 2024, USDJPY was really wrestling with both this black line or breakout level and the 50 DMA.
It was kind of stuck.
Yeah, it's like the pair was trying to gather enough strength to break free.
Yeah.
And then in mid-March, we see this decisive breakout above both the 50 DMA and the black line.
Yeah, almost at the same time.
Exactly. That simultaneous break is really key.
How so?
Well, it's a strong buy signal because it confirms we've broken through that significant resistance level.
Right.
But it also shows there's enough buying momentum to push the price above the 50 DMA, and that's a really important indicator of short-term trend direction.
So does that mean it's just a straight shot up from there?
Not quite. Even with strong breakouts like this, we often see a pullback.
A pullback.
Yeah, it's normal. After that initial excitement, traders often take profits, which causes the price to dip a little.
Makes sense. So we see that pullback in April and May.
Right. The price pulls back, but here's the important part. It finds support at the 50 DMA, and that bounce takes place above the black breakout line.
Above the breakout line, what's the significance of that?
Well, it's a classic example of how the 50 DMA can act as dynamic support in an uptrend.
Yep.
And the fact that this bounce is happening above the breakout level makes the bullish case even stronger.
You mean it?
It shows that buyers are still in control.
Okay.
And that these dips are seen more as buying opportunities than signs of a reversal.
So we're starting to see how these two levels, the 50 DMA and the breakout level, really weave a story together.
Exactly.
But then June throws us a bit of a curveball.
It does. There was a sharp reversal in USDJPY.
What happened?
It was triggered by a surprise Bank of Japan rate hike.
Ah.
This really caught the market off guard, sending the pair tumbling down.
So I'm guessing this is where our trusty 50 DMA comes back into play.
Absolutely. In late June, the price breaks below the 50 DMA.
Oh.
And this serves as a warning sign that the bullish momentum is fading.
So this could mean...
It could signal a corrective phase or even a potential trend reversal.
So at this point, long USDJPY traders are probably starting to sweat a little.
Probably. While a break below the 50 DMA doesn't guarantee a reversal, it definitely tilts the scales in favor of the sellers.
Yeah.
But here's where it gets even more interesting. The price then heads back down towards that black horizontal line.
You mean our earlier breakout level?
Exactly.
Right.
That's right. That's a crucial test. Will that breakout level hold as support, or will the bears push through?
We'll have to find out what happens in July.
So as we left off, USDJPY was headed straight for that black horizontal line.
Our breakout level from back in March.
Right. And it's important to remember this isn't just some random level.
Right.
This line represents where USDJPY broke out of that significant double top pattern.
The one from 2022 and 2023.
Exactly. So it carries a lot of weight in terms of potential support.
Okay, so the big question is, does it hold?
It does. In July, USDJPY finds support right at that black horizontal line.
So it prevents a further breakdown.
Exactly.
Now, why is that so significant?
Well, think about why double tops are considered bearish signals in the first place. They often show that buyers have tried and failed not once but twice to push the price higher. And that usually means selling pressure is building. When the price breaks below the neckline of that double top, which in our case is that black horizontal line,
Right.
it's seen as confirmation that the sellers are in control.
So the fact that the price found support at that exact level,
Yeah,
it suggests that traders are still paying attention to that historical price action.
exactly. It really shows how powerful technical analysis can be and how those past price patterns can continue to influence how the market behaves.
But even though that breakout level held as support, USD JPY was still trading below the 50 DMA.
Right.
What does that tell us?
It tells us that while the bears hadn't completely taken over, the overall momentum was still on their side.
I see.
Think of it like a tug of war.
Yeah.
The buyers managed to hold their ground at the breakout level,
Yeah.
but the sellers were still pulling the rope their way.
So was that bounce off the breakout level in July a good opportunity to buy? Or was it too risky?
Well, that's a great question, and it highlights a really important point about trading.
What's that?
There's rarely a perfect entry or exit point.
Right.
It's always about weighing the risks and rewards. You have to base your decisions on your analysis and your own personal trading plan.
I see.
Some traders might have seen that bounce as a bullish signal,
Right.
but others might have been more cautious because the price was still below the 50 DMA.
So it's a real buyer beware situation.
Exactly. And as we move into September, things get even more interesting.
How so?
Well, USD JPY tries to stage a recovery early in the month,
Okay.
but it runs into resistance right at the 50 DMA.
So it can't break back above.
Nope. It gets pushed back down.
Mm.
And this rejection at the 50 DMA really reinforces the idea that the sellers are still in control.
It's like they're trying to climb a hill but keep getting knocked back down.
Exactly.
But even with that bearish rejection, that black horizontal line is still holding strong as support.
Yeah, it's like a safety net preventing the price from completely collapsing.
That's interesting.
This really shows how important it is to understand support and resistance levels.
Uh-huh.
Even in a downtrend, a strong support level can act as a barrier.
To prevent the price from falling too far.
Right. And in this case, that breakout level for March is playing that crucial role.
Okay, so we've got this ongoing battle between the buyers and the sellers.
Yeah.
The 50 DMA is acting as this battle line, and the breakout level is like the last line of defense for the bulls.
Right.
What happens next?
Well, in mid-October, we see this big shift in momentum.
Oh, yeah.
USD JPY breaks back above the 50 DMA.
Wow.
This was driven by a combination of technical factors and a new prime minister in Japan.
A new prime minister. What does that have to do with USD JPY?
Well, this new prime minister has what's called a hawkish stance.
A hawkish stance.
It means they're focused on policies that could lead to higher interest rates. And in the currency market, higher interest rates tend to attract foreign investment,
I see.
which can boost the value of a currency.
So because of this new prime minister?
The Japanese yen became more attractive to investors.
And that explains the surge in USD JPY.
Exactly. And this break back above the 50 DMA,
Yeah.
combined with the fact that the price had held above that black horizontal line throughout the correction,
Right.
it paints a pretty bullish picture.
It does. So as we wrap up this part of our deep dive into USD JPY, let's recap some key takeaways.
Okay.
First, we saw how bounces off the 50 DMA, especially when they happened above that breakout level, signaled continued bullish strength.
Right. Those bounces showed us that buyers were ready to step in and support the price at that key moving average.
Exactly. Second, we learned that breaks below the 50 DMA, like the one we saw in June,
Yeah.
can warn us about potential bearish momentum.
Especially when we see other bearish signals too.
Right. And third, we saw how that black horizontal line, our breakout level from the double top pattern, acted as a critical support level throughout the year, even during those periods of weakness.
It really became a psychological anchor for both buyers and sellers.
And finally, we saw that the most powerful signals came when both the 50 DMA and that breakout level were tested at the same time.
Right.
Like when the price broke above the 50 DMA while it was already above the breakout level.
Yeah, that really strengthened the bullish case.
And on the flip side, when the price broke below the 50 DMA while it was below the breakout level.
That confirmed the bearish momentum.
So by understanding how these two levels work together, traders can get a better sense of the trend and potential turning points.
Exactly.
So what does all this mean for our listeners? How can they use this information in their own trading?
Well, the key takeaway here is to look beyond just individual indicators.
Okay.
You need to consider the broader context. The 50 DMA and breakout levels are great tools, but they're even more effective when you use them with other types of analysis,
Like what?
like fundamental analysis, sentiment indicators, and other technical tools.
So it's about getting multiple pieces of evidence to support your decisions.
Exactly. The more confirmation you have, the more confident you can be.
And remember, trading is all about managing risk.
Right. By understanding how these levels work, you can identify potential entry and exit points, set stop loss orders to limit your losses, and ultimately make smarter trading decisions.
That's some solid advice. So we've covered a lot today, but I want to leave you with one final thought.
Okay. So we've talked about how the 50 DMA and breakout levels can give us some really valuable insights.
Yeah.
But there are some even subtler aspects to their interplay.
Oh, really?
That can give us even more information about what's happening in the market.
I'm intrigued.
For example, even the angle of the 50 DMA itself can tell us something about the strength of the trend.
The angle, you mean like whether it's sloping upward steeply or more gradually?
Exactly. A sharply rising 50 DMA often suggests really aggressive buying and a strong uptrend.
Okay.
On the other hand, if the 50 DMA is flattening out or even declining, that could be a sign that the momentum is weakening.
Even if the price is still above the breakout level.
Right. It's not just about whether the price is above or below the 50 DMA. It's also about how the 50 DMA itself is behaving.
So we need to pay attention to both.
Exactly. Think of it this way. The 50 DMA is like a moving average of the trend itself.
Okay.
It smooths out all those daily ups and downs
Right.
and gives you a clearer picture of where things are headed.
So by looking at the slope of the 50 DMA,
We can get an even better sense of the underlying direction of the trend.
that makes a lot of sense. Are there any other subtle signals we should be watching for?
Another thing to consider is the distance between the price and the 50 DMA.
Okay.
If there's a large gap, especially after a strong move,
Yeah.
it could mean the price is overextended.
So like it's gone too far too fast.
Right. And that means it might be due for a pullback.
Or at least some consolidation.
Exactly. It's like stretching a rubber band.
Uh-huh.
If you stretch it too far, eventually it's going to snap back.
So that doesn't necessarily mean the trend is reversing,
Not necessarily.
but it does mean we should be cautious.
Right. It's all about understanding those nuances in the price action.
And using them to make better decisions.
Exactly.
I think this deep dive has given us a really great framework for analyzing USDJPY
Yeah.
and really any currency pair.
By combining the 50 DMA with those key breakout levels,
Uh-huh.
we can identify those high probability trading setups
Right.
and manage our risk more effectively.
Absolutely. And of course, this is just one piece of the puzzle.
Right.
It's important to combine this technical analysis with fundamental analysis,
Yes.
sentiment indicators, and your own personal trading strategy.
To make the most informed decisions.
Exactly. Well, we've covered a lot of ground today,
We have.
but I hope this has sparked some ideas for our listeners,
Yeah.
given them some new tools to add to their trading arsenal.
The journey of a trader is all about constantly learning and refining your approach.
That's so true.
So keep exploring, keep practicing, and never stop seeking out new knowledge.
Great advice.
Yeah.
So until next time, happy trading, everyone.